Thanks, Renaud. That was great. So for our next speaker, before I started working with him, I was a big fan of his work, and it's really my go-to source for all information about P2P and online lending. With that, I now have the honor and privilege of working with Peter Renton, who's going to share with us now a market overview. And with that, introduce Peter.
Okay, thank you very much, Dara. So today, what I'm going to give you, I've got 20 minutes to try and give an overview of this industry. I'm going to go through the different verticals that we have, and also how the industry is expanding internationally. Great. Okay, so what I'm going to start off with is talking about the major milestones of the last year. This is just some of them. We've had this slide could be my entire presentation. There's been so many milestones, but I want to just go through, hit some of the main points here. That Eaglewood Capital and the Lending Club securitization was a key turning point in this industry. It was the first securitization that's happened, and it really gave credibility to this industry on Wall Street and with institutional investors in general. Now, Funding Circle merged with Endurance Lending Network back last year, and that was a seminal turning point as well. It really established the online business lending industry in this country, and it established Funding Circle as the first really global or international player. Now, you've got Common Bond in the student lending industry. They raised $100 million. That was no mean feat. And then Prosper, we saw the announcement this morning, overnight, of Prosper raising $70 million. That's been their biggest raise, but maybe even more important for them last year was their funding round that was supported by BlackRock. BlackRock, the largest asset manager in the world. I think it's like 3.8 trillion or something, and they're now investing on Prosper's platform, and they're an equity partner. Now, Renaud has obviously spent some time here talking about banks. It was a year ago when these banks first started to come into partnership with this platform. Now both Lending Club and Prosper have banks investing on their platforms. Another major milestone, the SoFi securitization. SoFi, one of the student lenders, that was the first rated securitization in this industry, and we have Mike Cagney coming up here later who will be talking more about that. And of course, the Lending Club, the industry leader, expanding into small business loans. They are now no longer a one-product company, and as Renaud showed, they've got multiple products now, which also, with their acquisition of Springstone Financial, they now have a broader suite of products than just the basic unsecured consumer loans. I like to put this chart up from time to time. It's the Lending Club and Prosper total originations. This is the 5-year originations from January 2009. And it's indicative of the growth of this industry. It's almost a perfect exponential curve. So the state of this industry in the USA, when we gathered last year, really Lending Club and Prosper, they've really dominated this industry from day one. But the interesting thing, in the last 12 months, we have several new companies coming on board, and it's that they're obviously not going to have it to themselves for much longer. In fact, some of these companies have just launched recently. Borrowers First had a big announcement last night as well. They've got a large round of equity funding, and I think what we'll see is some of these new players getting themselves established. And when it comes to loan volumes, these are my estimates. This is not from the platforms themselves, but this is where I believe we're going to have between Lending Club and Prosper, they're going to do around $6 billion in loans this year. This is obviously just taking into account Lending Club's acquisition. That number might well go up, but that's what I was saying for the unsecured consumer loans. And the others are probably going to be less than 250 million. There are some that are going to be very small, some that are going to be a lot higher. And 2015, I think we're going to see one of these players on this previous slide, and maybe 2 or even 3, get a lot of traction and become a serious competitor. So on to small business lending, that has been booming, and you can hear this is not a complete list, but these are some of the main players. Some of these companies have just launched business lending operations. Some of them are even yet to launch, but these are some of the main players in the small business lending industry. I think it's a fascinating piece to follow. And what's interesting is longer term loans, these 3 and 5 year loans. These are just getting started. I mean, Funding Circle USA was Endurance. They only issued their first loan 2 years ago, and Lending Club have just started in the last month or two, and it's just getting started. But I think that particular sector is going to be very big. Shorter term loans have been around for several years. We've got Can Capital is the market leader here, and On Deck is also very large. On Deck have really, for the most of their existence, have focused on the shorter term loans. They're now moving into longer term with their 2-year product on Deck 24. And the small business industry, I was talking to someone last night, there's really interesting things going on with the alternative data sources. Underwriting these loans is not, they're not using the same metrics as the banking system has done to underwrite loans. They're really pushing the envelope. They've got new ways of underwriting. And there's also movement towards the marketplace. I mean, some of the business lenders are going to remain more balance sheet lenders, but there's some that are, a lot of them are interested, a lot of them are here today because they're interested in moving more towards a marketplace model. And that there are very different business models. We've got the shorter term loans, working lines of capital. We've got receivables financing. There's a lot of different models in this space. On to student loans, we have the two main players, SoFi and Common Bond. And the thing about student loans are that it's a $1 trillion market. We all hear about a lot. It is being disrupted. Both SoFi and Common Bond are growing very, very fast, and some of the other players are as well. The thing that's interesting to me about student loans is that it's one of the few areas of this business that's really focused on building community. Investors and borrowers can actually connect with each other. It's not necessarily anonymous, and there's real community that can get established here. Now, the loans themselves are lower yield for investors, but there really are prime, super prime type borrowers. But they also lend themselves very well to securitization, as with what happened with the SoFi deal around Christmas. And some companies like SoFi are using student loans really as a launch pad to become an online lender, a broad diversified online lender. Upstart as well, focused on their income sharing agreements, and now they're doing unsecured 3-year loans, just in a similar vein to what Lending Club and Prosper have done. Now, real estate is really interesting. It's just absolutely booming. I mean, I think there are around 100 platforms now that are either in some form of startup, because the reason they're booming is it is the biggest opportunity in this industry. It's a $13 trillion market according to the Federal Reserve. And it's tiny right now. We've got less than $1 billion, I think probably even less than $500 million in loans that have been issued. And so there's a lot of room for growth. Great thing about real estate, it's easy to understand. Everyone knows what a home loan is, what a building loan is, and it's secured. That's one of the big things in its favor, and I think one of the reasons why it's going to grow so fast. And the thing that I believe, like REITs have been popular over the last few decades, even with the financial crisis hammering home prices. REITs are still popular. But what I think might happen, there's going to be a segment of REITs that are going to move to the online lenders, because with a REIT you don't have any say in what kind of property you own. Whereas if you decide to have a portfolio, you build it yourself with these online real estate platforms, you can create your own private REIT that's just you. You can decide whether you want to be just in California, whether you want to be just in office or home loans, whatever you want to do. And you can get to pick and choose which deals you do, because each deal is actually a separate project. So you can decide, you can pick and choose as the projects come up on the platforms, which ones you want to fund. And there also are some vanity projects. The Hard Rock Hotel in Palm Springs is on Realty Mogul's site right now. You can go and own a chunk of that. There's some major office buildings as well, so you can go and walk downtown and say, look, I own some of that building. And the other piece is investing in flips. Real estate flips, fix and flips are great because it's a short-term loan, and it's a lot of work. If you want to go and buy a house and do it up, even if you're just the manager of the project, it's a lot of work. Here you can just have a portfolio of fix and flips, and you can build it very, very easily. Now let's switch over across the pond to the UK. The UK has a very dynamic market. There's a lot of competition there. It's been more competitive really than the US historically. And there are some of the main players. It's still dominated though by the big three. Zopa, RateSetter and Funding Circle are the three main players in the UK. That's changing, and I want to give a shout out to my fellow blogger over in the UK, the P2P Money blog. He's on an excellent page there tracking the UK companies, and you can see all sorts of information about pretty much every player in the industry there. There are some new players making a splash. Lendit just launched last year. They did a £4 million loan, which was the largest peer-to-peer loan ever funded. They just issued that earlier this year. Assets Capital are also here, and they're growing extraordinarily fast. I saw they were last month over month, they grew at 224%. The thing about the UK, it's a slightly different model. Typically, not every platform, but they're typically lower yield, and they really emphasize the savings model where it might be 4 or 5%. It's really a replacement for savings. These are super prime borrowers that the UK platforms have typically been going after. They also have robust secondary markets, probably more active than the ones we have here, and there's a lot of people who invest through the secondary markets in the UK. The rest of Europe hasn't grown as fast as the UK. The UK dwarf the other platforms, but there are certainly, most countries in Europe now have a peer-to-peer lending platform. And what's interesting that's happening with Bondora and Lendico, those companies are allowing cross-border investing, which is new. You can basically invest in borrowers in a different country. That is something that I think we will continue to see grow. Maybe not in this country, but certainly in Europe, we will see lots of different platforms having cross-border investing. China is an interesting market. It's probably the most interesting of any market in the world because we talk about the UK being competitive. China has hundreds, possibly even thousands of platforms, and it's relatively unregulated, and that is changing. But we have a very dynamic market in China, led by CreditEase. CreditEase are actually the world's largest. They're roughly twice the number of loans of Lending Club. They've originated from day one. They have a very interesting model. They have a large offline sales force that go in and sign up borrowers face to face in the towns and villages and cities in China. China Rapid Finance basically 50% of all credit cards in China go through their underwriting model, and they now have a peer-to-peer arm that's done up $250 million. Lufax may be the fastest growing peer-to-peer platform on the planet. You see the numbers there in 2012 and 2013. 2014, they're supposed to do between $1.5 and $2.5 billion. And the thing that's interesting about them, they're partnered with an insurance company that is actually guaranteeing the loans for investors. They're slightly lower yield than the rest of the market, but these loans are backed by an insurance company. And then we have Dian Rong, which was started by Lending Club co-founder Sol Hittite, who's trying to take his knowledge that he gained working at Lending Club and apply it to the Chinese market. If you're interested in China, we have a China panel tomorrow morning, and my partner Jason Jones on Lend Academy penned an excellent article, an in-depth analysis of the most important players in China. That was on Lend Academy on Friday of last week, so go check that out as well. Then we have the rest of the world. There are platforms popping up in all kinds of countries. We have, Argentina, and I was talking with Alejandro from Affluenta, who they're expanding throughout Latin America. Society One in Australia, Harmony in New Zealand. We have throughout Asia, Africa, Canada, Mexico. There are platforms coming online all the time. And we're also expanding into new areas. I receive emails on a weekly basis from someone who is starting a new peer-to-peer lending platform, and these are some of the places where I think this year we will see platforms come on board on auto loans. I know of 2 that are in development. Equipment finance, there's someone here today who is starting an equipment finance platform. We have Red Rock Assets, just went live this morning on their website doing mining projects. Medical loans, the Lendit Club acquisition obviously brings that into play. And then we have solar energy that's in place today, and that's also expanding as well. And the fact is, this industry is booming. That's no news to anybody here. But one thing that I thought was interesting, we have over 100 different platforms here at Lendit. So these are platforms, some of them haven't started yet, some of them have been in existence for a while, but you can see this marketplace by this time next year is going to look very different. And it's driven a lot by the huge investor demand. There's investment money that is struggling to be put to work, so people sense an opportunity and launching new platforms. Another trend that we're seeing is companies moving across borders. We have obviously had the Funding Circle UK, US deal. They're now a multinational company. RateSetter have announced they're going into Australia. They're also going to go into New Zealand as well. We have Lendico that are operating in Europe. They just launched in South Africa. And they're interesting that they are planning on adding a new country just about every month for the rest of this year. So they're going to be an interesting company to watch. As we know, banks are getting involved. Renaud just spent detail of the partnership with Union Bank. We also have Renton partnering with Barclays Bank. I'm going to be sitting down with two gentlemen there. That's in South Africa. We'll be chatting this afternoon about that deal. I think that's fascinating. Westpac is one of the largest banks in Australia, is partnering with the largest peer-to-peer lending platform there. So there's a lot of interest from the banking sector now in this industry. And we have another trend is growing number of securitizations. Eaglewood just did the first. There's now been several. SoFi, Insict, OnDeck just announced one last week. That's going to continue to grow. And interesting that we have expanding beyond prime borrowers is a theme that I think we're going to see more and more. Investors are demanding it. We have Banco Santander, who they're one of the largest banks, if not the largest in Europe. They're coming on Lending Club's platform, taking a good chunk of their Policy Code 2 loans, which are near prime. That's just an example of, again, people wanting more than just the prime borrowers. Borrowers First and Peerform are now going to basically allow loans on their platform, originating loans. They still think these are creditworthy borrowers. They're not prime, they're near prime, down to a 600 FICO. Freedom Financial as well in the emerging prime segment. We're going to have a whole session on that late tomorrow, which I think is going to be fascinating because, again, this is a way for to expand this industry. The borrowers, we need more borrowers, and going down a little bit further on the FICO scores is a way to do that. And we're also building out the online lending ecosystem. There's, most of the companies that I mentioned there are here today. There's going to be a lot of them are doing demos downstairs, and you'll be able to learn more about them. And of course, big data is going to be a theme we're going to hear throughout this conference. As part of now, it's going to become part of the online lending ecosystem. We're also, refocusing on Renaud mentioned it in the Q&A. But there is a refocus on the individual investor. Most of us here are institutional investors, or that's the sort of side that we ride on. But individual investors, and I'm obviously one of those as well, there's been a renewed focus both at Lending Club over the last 6 months, Prosper over the last couple of months, where they're now really trying to serve the individual investor more. At the same time, still giving the institutional investors what they want. They're able to do that as they grow the volume of money the volume of loans that are being originated. We're going to see more acquisitions. That's pretty much a given. Lending Club's done the first one. I'm sure it's not the only one they're going to do. That's something that I think other companies will get in on the act as well. And the Lending Club IPO, I just had to throw it in here because it's certainly something that everyone is thinking about this year. That's going to be a real benchmark for this industry. And the other thing that is, I want to at least mention the borrowers here, because there's been a renewed focus on borrowers. Ron Suber at Prosper spent his first year focusing purely on getting investors in. He's completely switched now, focusing on getting borrowers. Lending Club as well, really much more focused than ever before on getting borrowers in the door. So we're seeing the development of this asset class. We started really with unsecured consumer lending. We're now adding small business, student loans, and real estate have come in the last couple of years, and we're moving from a single product companies into multiple products. And I see a trend that's happening as, for multiple products, we're going to probably morph into wealth management companies. These companies are going to have wealth management arms. Because investors are ready. This is a big theme. Investors want this asset class. I spoke to a ton of people last night from some of the largest investment bankers of the world are here. They really want access to this asset class. And the good news, ladies and gentlemen, is that we are just getting started. Thank you very much. Okay.